What if the platform you're using to invest in your financial future isn't as perfect as it seems? Public.com, a popular investment app, has gained traction for its unique approach to trading and community engagement. But beneath the sleek interface and innovative features, there are some significant drawbacks that every investor should be aware of. Let's dive into the details. The hidden costs of no payment for order flow. Public.com prides itself on transparency by not accepting payment for order flow, PFOF, a practice where brokers earn money by routing trades through specific market makers. While this might sound like a win for investors, the reality is more complicated. Instead of PFOF, Public asks users to leave an optional tip when placing trades. This tip can be significantly higher than what traditional PFOF would have generated. For example, tipping $10 on a $1,000 trade is far more costly than the mere cents brokers typically earn through PFOF. This approach may feel like an ethical choice, but can quickly add up for frequent traders. Additionally, Public charges an inactivity fee of $5 every 6 months if your account balance is $20 or less and remains inactive for 90 days or more. For users who aren't actively trading or investing large sums, these fees can feel like a penalty for simply holding an account. Limited account types and features. Public.com offers only standard brokerage accounts, no retirement accounts like IRAs or custodial accounts for minors. This limitation makes it less appealing to long-term investors who want tax-advantaged options or parents looking to set up accounts for their children. If you're seeking diversity in account types, platforms like Fidelity or Charles Schwab might be better suited to your needs. Moreover, Public doesn't support margin trading or mutual funds. While it does provide access to stocks, ETFs, options, and alternative assets like art shares and cryptocurrency, these omissions can restrict investment strategies for those who prefer broader options. Premium pushiness and subscription costs. Public Premium is another area where users might feel nickel and dimed. The premium tier costs $10 per month or $96 annually after a 7-day trial. While Premium offers features like extended trading hours, Morningstar research access, and custom portfolio tools, the constant push to upgrade can be frustrating. Some users have even reported accidentally enrolling in Premium due to system bugs or unclear notifications, a costly mistake if unnoticed. For those who don't want to pay extra for features that other platforms provide freely or at lower costs, Public Premium might feel more like an upsell than a value add. Illiquid and speculative investments. One of Public's standout features is its offering of alternative investments, including shares in collectibles like comic books and vintage Pokemon cards. While these options are intriguing and unique, they come with risks. Alternative assets are often illiquid and speculative, meaning they can be difficult to sell and subject to volatile price swings. For investors focused on stability and long-term growth, these assets may not align with their financial goals. Subpar educational content. Public markets itself as beginner-friendly, but falls short in delivering high-quality educational resources. Its articles often lack depth and accuracy. Some even feel more like marketing fluff than meaningful analysis. For instance, one article incorrectly defined yield, a critical investing concept, a glaring error that could mislead novice investors. The app also includes webinars and videos meant to educate users about investments. However, technical issues such as buggy video players and inaccessible webinar recordings undermine their effectiveness. Compared to competitors like Fidelity or Robinhood, which offer robust educational materials tailored for beginners, Public's efforts seem rushed and underwhelming. Execution quality concerns. Public doesn't accept PFOF revenue for stock trades, but does accept it for options trades, sharing half of this revenue with customers who trade options. While this sounds beneficial on paper, Public's overall order execution quality is slightly below average compared to other brokers. This means trades may execute slower or at less favorable prices than expected, a critical drawback for active traders who rely on precision. Customer support limitations. Another area where Public falls short is customer support. Users frequently report limited access to help when issues arise, whether it's resolving account problems or addressing technical glitches within the app. For an investment platform handling sensitive financial transactions, reliable customer support is essential. Unfortunately, Public doesn't meet the mark here. Mobile-first approach, a double-edged sword. Public.com's mobile-first design is sleek and user-friendly, a major plus for busy investors who prefer trading on the go. However, this simplicity can make impulsive trading too easy, especially for beginners who might not fully understand the risks involved in frequent buying and selling. Additionally, minor security concerns have been noted with the app's lack of passcode protection or automatic logout features. For users prioritizing safety over convenience, these oversights could be unsettling. Who should avoid Public.com? While Public.com has its merits, commission-free trades on stocks and ETFs, access to alternative assets, and a vibrant social community, it's not ideal for everyone. Cost-conscious investors, the tipping model, and inactivity fees can add up quickly. Long-term planners, the lack of IRAs or mutual funds limits retirement savings options. Beginners seeking guidance, poor educational content makes learning about investments unnecessarily challenging. Active traders, subpar execution quality could impact trade performance. International users, Public caters exclusively to US-based investors. Public.com stands out in certain areas but falters in others that are critical to many investors' needs. From hidden costs disguised as tips to liquid investments and lackluster educational resources, these drawbacks are worth considering before committing to the platform. With that said, thanks for watching, and until next time.